It was another opportunity for key stakeholders in the Nigerian business and economic sphere to learn about global trends as they affect the nation, subnationals, and corporates at the second quarter 2022 Economic Associates One Day Conference. The facilitator and CEO Economic Associate Dr. Teriba highlighted the key global economic trends that is shaping the entire ecosystem.
Over the last 5 years, we've seen wild swings in commodity prices. And over the next 5 years, that pattern will roughly repeat. So it went up from 2016 to 2018, dipped into 2020, has increased since 2021, and is projected. That projection there is World Economic Outlook projection by the IMF. That we go steadily back towards its 2021 level over in the course of the 5 years after 2022. But World Equity Index has held steady in the past 5 years and is largely expected to hold steady in the next 5 years. So, looking at world equity prices already presents to you a bleak future for commodity prices, repeating the recent experience with commodity prices, side by side with a bright future for equity index. What does this mean? Does it mean anything? Why should we care? It means a lot. And what it means becomes clearer if you look at the second chart. The two variables in that chart, one is world exports of goods and services, the blue line. And the other is world FDI stocks, the green line. FDI are equity. So this is world equity stock. And the significance of those two variables is that export is an item on the global income statement, while equity, FDI, is an item on the global balance sheet. And oil price determines the value of export. Commodity prices determines the value of exports. So the bleak prospects for oil price paints a bleak prospect for export earnings. And if you plot industrial output, you plot agric output, you plot manufacturing output, they all followed similar trends to world exports. They have stagnated over the past 5-6 years and has even seen decline. And that is referred to as deindustrialization. So what the second graph shows you is that there will be the growth opportunities on global balance sheet are going to be bigger multiples of the growth opportunities on the global income statement. That's saying a lot. So, from anticipating price developments, you can already tell that over the next 5 years, opportunities on global balance or global income statements are going to be slim. Whereas opportunities on the balance sheet are going to be fat. And that gives every country every state, every company, a strategic sense of direction. Don't fish in dry ponds. You now have to make sure that you pay equal attention to balance sheet optimization as you have been paying to income statement optimization.
At the national level, he harped on the need for liquidity and urged the Nigerian government to explore all avenues of unlocking value from the national assets.
You've been in and out of recession because of illiquidity. We suffered rounds of devaluation, and poverty is rising. Hostilities. Every fourth line, things are becoming more hostile. Insecurity because of poverty. And if you allow it to go for longer, then the tension. So the national evolution is about first liquidity, and that's all these other countries got their backs covered, with the exception of Nigeria and South Africa. These are the only two countries that the whole world is getting more FDI. These two countries, we are suffering from the deindustrialization headwinds, and we are missing out on the financialization tailwind. All you have to do is to open up sectors that need investment for foreign direct investors to come in. Nigeria has done it before. So investors, when you offer GSM licenses, they came. They've saturated the space. So Nigeria's problem is that Nigeria shuns investors. We've recorded the success in the GSM telephony, in the LNG, in the pension. Do more. That's all. There's never a time that you did and the investors not do. It's just that you don't do enough. Basically, that's where we differ from all those countries that you have given as examples. That we need to connect local access to global liquidity to address the issue about debt that Dumebi Obodo raised. Instead of going to borrow $1.5 billion in Eurobonds market at 8% for 30 years. See, what other countries do is they sell shares in existing plants. It's cross-border M&A. Is that they sell the rights to come and open new plants. It's greenfield FDI. And if you look at us compared with India, Brazil, or China, our average deal count, annual deal count, from 2006 to 2019 was 6 a year, compared to how many in Brazil, how many in India, how many in China. Compare 6 spread across 36 states. And India has a similar number of states and provinces like us. So they have. If you look at the greenfield deals, we have 49 a year compared to 319 in Brazil, 795 in India, and 1,155 in China. So the point is that it's not that investors are shunning Nigeria. It is that Nigeria is shunning investors. The same prospectus that we will prepare, the same roadshow that you will do to raise 1.5 billion in Eurobonds, and you will contract advisors, give them commission on top of paying 8% annual interest rate. It's the same effort. So instead of issuing debt, issue equity.
The event featured contributions from Dr. Muda Yusuf, CEO of Center for the Promotion of Private Enterprise, Mr. Olufemi Awoyemi, MNI, Chairman of Proshare, and Mr. Dumebi Obodo, CEO Chams Access, on the key issues raised at the global and national levels.
For as long as Putin remains president of Russia, for as long as those sanctions remain, these disruptions are things that you may have to live with for some time. Although Dr. Teriba said maybe within 5 years or so, these things may peter out or so. But even 5 years in the life of a business is also a very long time. So I believe that this is another new normal, and we must have strategies to cope with this new normal.
In all these dynamics, as you see these trends occurring, what you basically do there for an economic intelligence is to study where are funds moving in which type of pattern are they moving in, and what is your country position to attract. And I think he was talking about it when he said that rather than look at debt. Well, debt is always supposed to be what you call a lazy man's option. It's supposed to be when all others are failed. That may be an option. But it's always the first option for us, which means that we are not able to play the liquidity game that is occurring. There does not seem to be a consensus on the way forward in the country. And if you look at in the way the political dynamics are heading forward to 2023, I am hopeful as a child who is in a war zone to survive. It can't help itself. It's just going to stay and hope that the bomb does not kill him where he's there. That's the whole scenario. The absence of this consensus, therefore, means that you cannot resolve simple issues like what is the economic governance model we are running? We need to understand that economic model to help us decide whether we have what? A revenue side problem, or is it we have an expenditure side problem, or a mismanagement side problem in the flows, or most importantly, our option and recourse to debt. Is it that we are going to go for non-interest structured funding, or are we going to stay with high interest commercial loans? Because in not understanding this, any of these suggestions and conversations would only satisfy our ego for intellectual correctness, but it doesn't solve the problem in the life.
We seem to be structured not to see value. And everybody sees oil, everybody sees, keeps monitoring the price of oil. And we are sitting on massive amount of money in dollar terms. And then we are comfortable going to beg for money here and there. It calls for a lot of reflection. It calls for major shifts in terms of our mindset. As we engage the government folks, we are close to elections this time around. We may have friends, relatives who are involved, some way, somehow, directly or indirectly. We should be able to coach them somehow towards this kind of mind shift.
Participants gave their takeaways from the seminar.
Very enlightening presentations. It gives us good understanding of forecasts and outlook for both the national and subnational levels, and of course, as a business in the tech space, to understand where to focus on, where to double up our energies, the kind of products we need to push out in the market, what type of market, and when. Gives us a better understanding of the kind of resources we need. And then, of course, the strategic focus for the remaining part of the year. And then, of course, in view of the elections that are also coming soon, that also helps us generally as a business. Yeah.
For me, looking at it critically, I also think that things like these are things that policymakers should be open to, should see, at least get a clear direction of what is happening in the global economy, the outlook, what is happening in our own economy, then how you can position ourselves, what we need to do to actually take us out of the current quagmire. For me, it's a well-rounded training session, and I say kudos to Dr. Teriba.
It was a great time at the conference. I think for me the most interesting part is how that a balanced outlook was given as regards the Nigeria economy, and so we know what to expect in the coming days. And then for the real estate sector, much emphasis was laid on um, place and space, and how that assets can go a long way in making a nation rich or poor. And so I mean, we live in great times, and we expect that as much as we can adapt this to our various businesses.
As Nigeria, alongside other countries in the world, face socioeconomic challenges, it is important to recognize that the lifeblood of an economy is liquidity. This means it is time for Nigeria to connect its assets to global liquidity.